Welcome to Boom Bust. Now, it's been a week full of great guests here on the show, and we have another amazing lineup for you today. First up, Boom Bust All-Star Jim Rickards is on the program. Jim sat down with me earlier today to talk about Europe, the ECB, and China. Then another BB All-Star, Marshall Auerback, is live and in studio this afternoon. Marshall knows a thing or two about Europe, and we're sitting down to discuss the whole secession trend going on in Euroland right now. Then in today's big deal, Edward Harrison and I are talking about the latest and greatest with the iPhone 6. You won't want to miss a moment, and it all starts right now. Our lead story today, China, because, you know, we thought, hey, heck, we'd at least take one day off from talking about Scotland this week, even if it's just in the headline. Okay, so China's central bank is injecting a combined 500 billion yuan, or just over $81 billion, into the country's top banks in a move signaling the deepest concerns yet of an economic slowdown in China. The Wall Street Journal reported that the People's Bank of China is pumping 100 billion yuan into each of China's top 5 banks in the forms of 3-month loans. These loans are being made via standard lending facilities, or SLFs. China's central bank joins its European and Japanese counterparts in boosting liquidity, while the U.S. is currently pulling back on its stimulus. Note, the U.S. is doing the exact opposite of every other major central bank on the planet right now. Just a little note. So concerns of a deeper downturn in the world's second-largest economy have rocked global markets recently. Wednesday, Fed Chair Janet Yellen announced another $10 billion cut to the Fed's monthly bond purchases as the Fed is now navigating towards gradual interest rate hikes. China's credit expansion isn't employing the same type of broad-cased stimulus that the U.S. did following the global financial crisis, but it does build upon targeted measures to shore up growth in China. And by attaching these 3-month terms to injections, China is maintaining control of the entire process. Now, according to the Chinese Commerce Ministry, China attracted $7.2 billion in foreign investment in August. That's down 14% from a year earlier and at a level not seen since February 2012. China saw $78.3 billion in foreign direct investment in the first 8 months of 2014, which is down 1.8% from a year earlier. Plus, in July, China's property slump, it worsened, and prices fell for the 3rd straight month as developers scaled back investments. The drop in Chinese real estate has prompted economists to forecast further financial defaults and slowing economic growth in the second half of this year. So will this monetary easing fix China's short-term problem and put them back on the path to prosperity long-term? Well, irrespective of whether monetary policy really works, this $500 billion yuan is just a drop in the bucket in terms of stimulus. Now, to discuss Europe and China, I was joined earlier by Jim Rickards, economist and author of Currency Wars, The Making of the Next Global Crisis. He has great titles. And I first asked him what his prediction on what will happen in Scotland is for tomorrow. Here's what he had to say.
That's the right answer. But if it's a yes vote, it's obviously an earthquake, very bad for sterling. I've been saying for some time that sterling is vulnerable to a currency crisis. I know sterling has been strong as a cross rate, but that's different than a crisis. A crisis happens all of a sudden and can result in extreme volatility, so it would be set up for that. Even if it's a no vote, it's going to be close, and the issue is not going away. They'll have other referendum in the future, so that'll sort of cast a cloud over sterling. What's interesting to me is if it is a yes vote, where does Scotland go? The Bank of England has made it clear that Scotland is not welcome into a currency union with the UK, with the pound sterling, so Scotland would either have to come up with their own currency, which is possible, but begs the question, do they have any gold? You know, would they get any from England? Probably not. They might actually join the euro. So I can see, if a yes vote goes through, I can see Scotland joining the euro, which is consistent with this idea of the euro expanding, which it has in recent years.
I see that the Chinese central bank is now adding stimulus as well. So is this part of a new round of currency wars?
Yeah, I think that's right. Again, it's one long currency wars, but yeah, we're now getting into more of a battle, more of a confrontation. But as I said earlier, the U.S. is the only strong currency. That cannot last. The U.S. cannot have a strong currency because we are desperate for inflation. We've done all the quantitative easing. We've cut rates to zero. We've issued forward guidance. We've done twist. We've done 3 versions of QE. We've done everything possible. The only thing left is to try to cheapen your currency, and in fact, the dollar's getting stronger. So that's the opposite of what. Now, the Fed might not have minded a stronger dollar 6 months ago. It did look like the economy was getting stronger. We saw, strong second quarter GDP. So there was a little bit of good data, and Europe was desperate for the help. They were slipping into recession. Japan's economy collapsed in the second quarter. So you can see the Fed sitting there saying, okay, we'll suck it up and deal. We'll have a stronger dollar and give Europe and Japan a break. But that's over. Now that they've had their breather, so to speak, the U.S. data is coming in lousy. We're the ones who need a break, and the only way to get it is a cheaper dollar. So I would look for that in the months ahead.
PIMCO says that China's growth will slow to 6.5% over the next year, and this is despite the official 7.5% target now in place. So do you think PIMCO is right?
Well, yeah, except I would go further. I've been calling for Chinese growth sort of getting to 3 or 4%. Now, I would say that Chinese growth is already at 4%. I know they print 7.5%, but about half that GDP that they produce is wasted. So, if I build a $5 billion train station in a small town, that's $5 billion of GDP, but the money's completely wasted because 10 people getting on the train are not going to pay for a $5 billion train station. So you go around China with these ghost cities we've talked about before, white elephant projects. So it is generating GDP, but it's completely wasted. If you adjusted the published GDP figures for the amount of waste, their actual real growth is probably already around 3-4%, and that's going to go lower. So I would take sort of see PIMCO's bet and raise them one, because I think they're lower than the consensus, but I would be even lower than that.
Jim, China is slowing. The other BRICS, except for India, are slowing, and Europe is slowing. So who is going to pick up the slack?
Nobody. We're in a depression, Aaron. This is a global depression. I've said this before. It started in 2007. It's going to continue indefinitely. Depressions are structural. Monetary solutions are cyclical. You cannot solve a structural problem with a cyclical remedy. Monetary policy won't work. What it could do eventually is cause inflation. Now, so far, people say, well, gee, where's the inflation? Krugman's famous for this. We printed trillions of dollars. There's no inflation. Well, that's because we would have had deflation, extreme deflation, but for the money printing. So the money printing did produce inflation to the extent that it offset the deflation. But now we're getting to the outer limit of that. The central bank's balance sheets are pretty much trashed, and the deflation's still around. The only sort of clean balance sheet left is the IMF. I think the next time we have a liquidity crisis, and we'll have one sooner than later, because they do happen every 5-7 years. It's been 5 years since the last one. The only source of liquidity left in the world is the International Monetary Fund. They can print their world money. It's called the special drawing right of the SDR. So you might see them print up, say, $5 trillion or say $5 trillion equivalent of SDRs. That would be about 3.5 trillion SDRs. But that's the only place the liquidity can come from. But basically, the world's in a depression. We're not getting out of it.
Always makes me happy, Jim, to talk to you. No, it really does, but it is scared on a macro level. Now, I want to talk about this. In the last year or so, we haven't seen any notable economic crisis in North America or Europe. So are there pressures building towards another crisis? And if so, where? Is it just globally?
Well, it'll erupt somewhere, it'll emerge somewhere, but it'll spread globally. I think there are a couple candidates. One is obviously U.S. stocks. That's a bubble. Maybe China is more likely. I mean, we talked about China's economy slowing down. That's best case. Worst case is that their credit bubble collapses. Chinese savers, and they are a wealthy country, or they've created a lot of wealth. They don't have many places to go. They can't invest in foreign stocks. They don't trust their own stock market. It's done very poorly. The banks pay them nothing, so they've been pouring all their money into real estate and also wealth management products. These are structured products, kind of like CDOs, but they have real estate behind them. The sponsors, raise money in these funds, give you a wealth management certificate, then they take the money and put it into real estate. but the real estate's not producing. It's all speculation. It's all a bubble. That bubble will collapse. I think you'll actually see money riots in China, people sort of, going down to the bank saying, give me my money back, and the bankers will say, sorry, that's not a bank deposit, that's one of these wealth management products. We're not responsible for that, and then they'll burn the bank down. So that'll sort of spread throughout China. Now, a lot of people say the Chinese have enough wealth to bail out their own banking system. They probably do, but they're very slow to make decisions. And meanwhile, the banks will be selling other assets, such as U.S. equities and U.S. Treasury bonds, to raise money to sort of pay off some of these depositors. So this will very quickly spread around the world. So it could be a collapse of the U.S. stock market bubble. It could be a collapse of the China credit bubble. Or it could be a geopolitical event. Or it could be a natural disaster, sort of like the Fukushima earthquake that knocked down a nuclear reactor and started a meltdown. So who knows what will cause it? It almost doesn't matter. What matters is that the structural instability is there. It's growing. All the banks that were too big to fail in 2008 are bigger today. They have a higher concentration, a percentage of the total banking assets, and much larger derivatives books. There's more leverage. Bank lending is very easy for large private equity funds, not for consumers necessarily, but we have a subprime bubble in auto loans. I mean, all the symptoms that we saw in 2005, 2006 are there again in larger scale, except this time it's going to be bigger than the Fed, because the Fed trashed their balance sheet bailing out the last crisis. They're not going to have much room to bail out the next crisis, so it's either going to spread or you'll have to call on the IMF.
That was author and economist, the wonderful Mr. Jim Rickards. Time now for a very quick break, but stick around, because when we return, Marshall Auerback will sit down with me live in studio, and given his extensive economic work at PIMCO, Madison Street Partners, and Levy, some pretty top guys there, it's fair to say that he knows a thing or two about Europe, and that's what we'll be talking about after the break. Then in today's Big Deal, Edward Harrison and I are discussing the latest and greatest surrounding Apple's new iPhone 6. And remember, you can see all segments featured in today's show on YouTube at youtube.com/boombustrT and on Hulu at hulu.com/boom-bust. Now we got to go, but before we do, here are a look at some of your closing numbers at the bell. Come on back with us.
Are you like me? Do you want your comedy news with some teeth? Want your comedy news to be a bare-fisted, no-holds-barred fight to the death? Like a truth vampire biting into the necks of the... Are you like me? Do you want your comedy news with some teeth? Want your comedy news to be a bare-fisted, no-holds-barred fight to the death? Like a truth vampire biting into the necks of the corporate elite and the billionaire freaks while they're going, make it stop! Well, that's what you get with my new show, Redacted Tonight.
Was that too much? I think that was too much.
Dramas that can't be ignored. Stories others refuse to notice. Faces changing the world right now. A full picture of today's news. Live, on demand, from around the globe. Ruptly.tv.
I would rather ask questions to people in positions of power instead of speaking on their behalf. And that's why you can find my show, Larry King Now, right here on RT. Question more.
Welcome back to the show. Now, to continue our discussion on Europe, more specifically Scotland, we're joined now by Marshall Auerback, Director of Institutional Partnerships at the Institute for New Economic Thinking. And I want to get right into it, Marshall. First and foremost, thank you for being here. But
no, it's nice to be face to face with you rather than
finally,
talking to a monitor.
this is amazing to see you in the flesh. Now,
Yeah.
let's dive right in, because I want to know a lot about Scotland and this whole secession trend in
Yeah.
Europe. But what do you think is going to happen in Scotland tomorrow?
Well, whatever happens, it's going to be a close vote. So the hope for the people that were pro-union was that this thing would be decided once and for all, that you would have a decisive vote against Scottish independence and the problem would go away. So even if the noes win tomorrow, that's not going to happen because it looks like the undecideds have broken very, very heavily in favor of independence, and which means it'll be like Canada. It will be an unresolved question that will keep coming up every few years, and it will disrupt Britain's monetary arrangements and will keep a perpetual risk premium on the economy for a little while.
Now, when you say like Canada, you mean Quebec, which I want to get
Yes.
to in a
Yeah,
minute.
that's
But
right.
first, I want to talk about the currency, because that's a critical issue on the economics front for Scottish secession. So, the Scottish National Party, they say that it's not going to be a problem. They're going to jump into the EU. Don't worry about it. We'll be fine. We'll have the euro. Walk me through the currency
Well,
issues.
okay, the currency issue I think is the most germane, and I think that's where Alex Salmond, who's head of the Scottish National Party, his position is weakest, because what he wants to do is retain sterling.
Right.
So he says we'll continue to use the pound, which is I think what most people want because they're instinctively conservative, and he thinks it will help to sell the yes vote. The problem, of course, is that the minute he does that, but withdraws from the existing institutional arrangements, such as becoming part of the Treasury, Bank of England, you effectively relegate yourself to being a colony or being a user of a currency, much like a state. And there's no guarantee, for example, that the English authorities will actually allow the Scots to continue to use the pound. But assume that they do, they become a user of the currency rather than an issuer of a currency, and they don't have genuine fiscal and monetary independence.
Haven't they said, no, you're not welcome to use the pound? Is it?
They have, but I don't think they could stop them from using it in the same way that, for example, Ecuador and Panama use the dollar.
Right. You can,
Yeah, but of course, I don't think that's what Alex Salmond had in mind when he made the
No, probably not.
Probably not. Although
Probably
he doesn't
not.
use the Celtic tiger anymore either. They used to always talk about Ireland, actually. But you also mentioned the euro. I mean, he has suggested that's a fallback position, but the European Union authorities, of course, have said that there's no guarantee that he'd be allowed into the European currency union. So, I mean, that's a question as well. So he may be left with no choice but to adopt an independent currency.
Right, because I understand that not having a central bank basically precludes you from joining
Yes, correct.
the
Correct.
EU.
That's right.
But given the problems in Euroland, why would the Scots want to do that
Well,
anyway?
that's a very, very good question. I mean, I think that a lot of these other independence movements in Europe have made the same decisions in the sense that they say we want to leave, the Catalans say they want to leave Spain, but we want to still become part of the union, the European Monetary Union, to which I say, well, you're just moving from one jail cell to another. To have genuine fiscal independence, you need an independent currency, and that's where it always falls down. So whether you're in favor of if you're in favor of genuine Scottish independence, then you should also be in favor of a new currency. So long live the thistle, for example.
There you go. There you go. And I like that genuine independence, not just one foot in the water.
Right.
Now, I understand that when Ireland gained its independence in 1923, that they had no central bank until it's the 1940s. They didn't. They went without a central bank. So why can't Scotland just do that?
Yeah, I suppose they could, but bear in mind there's two differences. One is that Ireland was largely integrated into the United Kingdom economy, so in a sense they had been part of it, so it wasn't quite as disruptive. And you were on a gold standard then, so in a sense, once you are on a gold standard and you don't have a free-floating currency, there is already an element in which your monetary and fiscal policies are circumscribed by the amount of gold that you have in your system anyway. So it was much easier to do in those days.
Now, Marshall, you're originally from Canada.
Yes,
and
that's right.
we mentioned this before.
That's
so
right.
you know about the separatist movement in Quebec.
Yes,
so,
that's right.
Could you highlight some of the key takeaways from that and what to expect in Scotland, essentially? Is there a parallel at all?
Oh, there's a lot of parallels.
Okay.
I mean, I've joked with my Scottish and English friends that there's a profound sense of deja vu all over again, in the sense that they think this question will be resolved once and for all. They said that when devolution was introduced, and I said no, it's just starting. You don't.
Just started,
I mean, I guarantee that what's going to happen is even if there's a no no vote, every single crisis will be exploited by the Scottish nationalists to secure more and more powers, and there'll be ongoing bribes sent off to Scotland to hope to buy their silence. And in fact, that's already working to the extent that George Osborne, even though he keeps preaching an austerity line for the rest of the United Kingdom, has promised extensive new fiscal powers that will be devolved to Scotland in the event that they vote no. So it's already happening.
There you go. Now, it seems like nationalism, it's just rife throughout Europe right now. So the bigger, kind of more macro question here is, do you think this has to do with the poor economy? Is that why we're seeing this? Yes,
I think that absolutely. And also the fact that in many instances, the nationalist movements, not always, but in many instances, they are the repositories for the anti-Euro sentiment and the anti-austerity sentiment. And the problem is that none of the mainstream European parties thus far have come out with an explicitly anti-Euro statement, or let's get out of the European Monetary Union. So often these the voters that are against this austerity trend and are against the prevailing policy status quo have no choice but to go to nationalist parties, which in many cases espouse anti-Euro policies. They're often very fascistic, anti-immigration, but it's more a case of rather right and left, but ins and outs, I think is the way I would describe it right now.
That's a good way of looking at it, because, you know, when I first think about it, I think of it right or left, and it's not that simple.
No, it's not, because, for example, you've got, in France right now, if they were to hold an election today, Marine Le Pen, who heads up the National Front, which is, you know, a modern-day fascist party, would probably win the presidency. And one of the reasons why she is so popular is because she is espousing an anti-Euro sentiment. It's not just because of her anti-immigration policies, but very much a case of she's anti-austerity and explicitly resuming the French franc.
So interesting. Now, what's the best case scenario here? You know, like basically, which country is the best example for Scotland? Would it be a Canada, a Norway? Iceland, maybe?
Well, Norway would be a fantastic example in the sense that if they had, you know, if there was as much North Sea oil as the Norwegians have, then the Scots can do whatever they want. I mean, they would have 6 million people rather than 4 million. Unfortunately, right now, there is no best case scenario. The best case scenario would have been that you had a decisive vote in favor of the Union, say 60-40 or 65-35. That doesn't look like it's going to happen right now. So it's a question that will be unresolved for a long time. You are going to have perpetual issues regarding the legitimacy of the Tory party, for example, implementing continued austerity policies where they have absolutely no representation north of the border. So that's a recipe for ongoing political tension. And of course, throughout Europe, you're likely to have continued nationalist outbreaks as long as we have a continuation of austerity policies.
And when we talk about nationalist outbreaks, we have to talk about Catalonia.
Yeah, Catalonia is a good example. Although they still seem to be, one independence party seems to be in favor of keeping the euro, the other one more ambiguous. But there's also, for example, the Vlaams Blok party in Belgium, and Belgium is not really a functioning country right now. I mean, they've had a government that's really not been a real government. It's just been an appointed bunch of technocrats because they can't agree on one. And it's possible that you could see that breaking up. Maybe the Lombard League raises its head again in Italy. So all sorts of things could be triggered if there's a yes vote tomorrow in Scotland.
Now, final question here. What's your advice for the Scots tomorrow?
You know, I would say vote no, because I think if you are retaining the pound, then you consign yourselves to the worst possible outcome. You will have no say in how monetary and fiscal policy is run, and yet you will be using a currency which relegates you to perpetual colonial status. So in fact, the very thing you're voting for is the very thing you won't have. So I would say that the nationalists have got to be honest and say, you know, we've got to try this again, we've got to try it with our own currency if we're genuinely committed to independence.
That's it, the genuine commitment to independence.
That's right. Not just any
lukewarm
commitment. That's right.
Marshall, thank you so much.
Aaron,
always
thanks.
A pleasure speaking to you. And so happy to do it in the flesh this time.
Yes, it was a pleasure.
Great.
Enjoyed it.
Thank you, thank you. That was Marshall Auerback. Time now for today's big deal. Big deal time, favorite part of the show with the wonderful Edward Harrison. And today we're talking about something near and dear to my heart, the iPhone 6. Yeah.
That's because you want to get one.
I know, exactly. Yeah, it's not near. I'm joking. But yeah, let's talk about the iPhone 6. Now, you know, Apple has already had wild success with attracting people to this new iPhone 6. So what new features are responsible for this huge interest?
Let me answer that, but before I do, I just want to say that, you know, to people who are watching, who are thinking about the Fed. We're not completely ignoring the Fed. In fact,
not. We know what happened today.
We know what happened. I would say that the Fed was slightly more hawkish going forward, but their forecasts were going down. So that's the gist of it. We'll talk about that a little bit more.
Thank you. I'm glad that you got that in there. We need to clear that up. We didn't miss the news.
But in terms of in terms of Apple, I think this is big news in the sense that their cash flow was going down. They were missing their numbers, et cetera, but they're now back. And it's not because there's anything specific about the iPhone that's better. Samsung has all the features. Anyone in the Android community will tell you, this phone has this feature, or this phone has that feature. The only thing that's really new is the thumb thing, and that's and that's actually been done one time before in the Android community. So it's not that it's new; it's because Apple has a halo effect, and they've finally moved into the space that is the 5-inch space and the phablet space that has been occupied by Samsung and all of their competitors in the Android market.
I mean, it's definitely a halo effect. But on the note of the finger scanner to open your phone, this has been done by iPhone before, but people weren't that into it when it happened.
And I'm definitely not into it myself.
I'm not into it either, and I want the iPhone 6. So,
it's a deal breaker for me because, look, first of all, we had the security problems with iCloud and that whole thing with the celebrities having their photos spread all over the place. Whether or not you think that this is something that, had to do with passwords and phishing and so forth, nonetheless, there are security problems with Apple.
Absolutely.
So then we're supposed to trust Apple not only with this finger thing, but also with their payment, Apple Pay. Personally, I think that, Apple's a closed system. It's not open source, so you have to trust them. You don't know what's in the code, what's behind it, where there are problems lurking.
Right.
And then this is a perfect opportunity for governments to get their hands on your data, your fingerprint, and then to build up their network. We know that Apple's been in the PRISM system. So how do we know that the government can't just subpoena Apple in secret and say, look, we want all the fingerprint data for these individual people, and you can't tell anyone because this is top secret. And
well, we know that they can't. Given the
so I look at that as actually a negative as opposed to a positive.
And here's another thing, like you said, if you trust Apple, then it'll be okay. Yeah, maybe you might trust Apple, but you trust them until their stuff gets hacked.
Right,
They're doing the best they can, but it doesn't mean that it's foolproof. So it's kind of, you're not going to make your own phone and work on your own network. I don't know how to keep yourself totally anonymous today.
Come on over to the Android side, I
won't do it. I won't do it. I don't think so. All right, Ed, as always, thank you. That's all the time we have for now. Thank you out there. And please send us a line on Facebook, facebook.com/BoomBustRT. And please tweet at us at AaronAid, at EdwardNH. From all of us here at Boom Bust, thank you for watching. See you next time. Bye-bye.